Hey fellow investors and fellow stock guardians, it's Thursday, February 25th, 2021. I'm Hoda, co-founder and CEO of StockCard, reporting to you from a deep in the red stock market. The stock market indices slid downward all day Thursday and finished the day deep in the red. Everyone is now worried about the 10-year treasury yield hitting the same level as last January or so. If you don't know why the treasury yield matters, it's easy to remember that when you can get paid a bit of safe and secure interest rate investing in the treasury yield and other bonds, why would you take the risk of investing in the stock market? That's the sentiment behind the market sell-off. It may feel painful today and you have all the rights to feel the pain, but remember, the stock market ebbs and flows. That's what a healthy stock market does and should do. The downward movement is a good chance to buy your favorite companies at a lower price. Don't rush into it, but also don't let the fear paralyze you from making good investment decisions for the long term. Contrary to the overall market, several companies from the future of shopping list of stocks on the StockCard's feature tab had an excellent Thursday. For example, Etsy was up more than 3% after its quarterly earnings report. The stock I own and I'm excited about that I want to talk about today is called Revolve. It was up by more than 9% today after beating expectations in its latest quarterly earnings report. If you missed yesterday's market recap, take a moment to watch that one or listen to it. I spoke about the future of shopping stocks extensively yesterday. But let me add a little bit more today. On Revolve's StockCard, click on the growth potential bucket and check out the 28% growth rate expected for the social e-commerce market. Companies such as Revolve are at the forefront of a rapidly growing industry that allows people to buy the products they like and need on social media. I believe every investor should consider this growing market and industry as a part of his or her portfolio. With the Nasdaq index down by more than 3%, it's no surprise to see several high flyer stocks hovering in the red zone. The one stock that grabbed my attention today though is called Redfin. Shares of Redfin were down more than 19% today. This real estate technology company has been flying all along during the pandemic. The demand for real estate is quite strong as people are moving between cities to take advantage of more relaxed work from home policies by corporate America and maybe around the world. And of course, the lower interest rate doesn't hurt either. However, investors are worried about the costs Redfin must incur to address this heightened demand. The company announced its latest quarterly earnings report and forecasted a loss for the next quarter. While the loss seems to be scaring off investors, as usual, most investors haven't taken the time to dig deep enough to understand why the costs are rising. During the pandemic, Redfin shut down its Redfin Now operations, which is the division that buys your house for cash for a fee and lets you free of the selling hassles. Shutting down the operations turned the company profitable during the pandemic. However, Redfin Now is back on, and that has turned the operations of the overall company unprofitable as the company ramps up its services in that new division. Regardless of the overall market sell-off and considering the rush in home buying demand, the stock price drop today seems to be an opportunity to pick up Redfin's share. I'm quite interested in the stock and watching it closely. If you are too, make sure to follow the company. Following a company on a stock card would allow you to receive email notifications when important information such as profits, sales, earnings ratio, valuations, and other important information about a company such as Redfin changes. By the way, the world's largest cryptocurrency exchange, Coinbase, plans to go public via direct listing on the Nasdaq Stock Exchange with a $100 billion market valuation. I'm both astonished by the market cap and excited for the opportunity. This is something to watch because the line between stock exchanges and cryptocurrency exchanges are getting blurry, and that means a lot of new opportunities for us investors. Some early takeaways from the company's IPO documentation is that Coinbase has more than $1 billion in revenue and more than $300 million in net income, which is quite astonishing. I plan to dig a bit deeper into this IPO in the next few weeks to better understand the ins and outs of this cryptocurrency exchange. If you have already looked into Coinbase documentation, let me know what surprised you the most in the comment section. Love to have a chat with you if you've already done so. As always, if you like to give a stock card a try, research as many stocks as you want, and receive updates about the stocks and portfolios you're following, like Redfin or Revolve that we talked about today, sign up for a 14-day free trial with promo code ROLLWITHOURCEO, all lowercase and in one word. That's it for today. If you like these quick market recap reports directly from my daily stock market research, please like and subscribe and share with your fellow investors. See you tomorrow.